What is happening, everybody? Welcome back to another episode of Northeast Georgia Real Estate Podcast. As always, I'm your host, 𝐃𝐑𝐄, and we're mixing it up on you today. Today, I am super excited about sitting down with a true expert in the multifamily investment space, Justin Ferguson. Justin's been with Marcus Millichap for a little over 8 years, specializes in multifamily investment sales throughout Southern Virginia MSA. As a trusted advisor to corporate professionals, private investors, REITs, developers, syndicators, he helps his clients strategically grow their portfolios by maximizing returns and optimizing investment cycles. He does have a tailored approach that helps investors double their unit count cash flows using proven measurable strategies, and he likes to stay ahead of market trends, ensuring that his clients have insights that they need to make smart, informed decisions. So, regardless if you're an active investor, developer, just somebody looking to kind of understand what's going on in the multifamily market better in Virginia, this is going to be an episode you don't want to miss. Welcome, first-time guests and loyal listeners to the Northeast Georgia Real Estate Podcast. I'm your host, 𝐃𝐑𝐄, and I'm here to guide you through the real estate landscape across our region. Whether you're a buyer, seller, investor, or just plain curious, this podcast is going to be your go-to source for local insights. We explore real estate trends, economic forecasts, and highlight local businesses. You can expect expert interviews and valuable discussions to help you make informed decisions in the Northeast Georgia property market. So sit back, relax, and let's enjoy this crazy journey into the real estate market together. All right, Justin, what's up, my man? Welcome to the podcast.
Great, Jake. Listen, happy Monday to you. Glad to be here. Glad to chat real estate. I think it's the more I do real estate, the more I want to chat about it. I don't know if anyone else feels the same way, but it's just after doing this for so long, it doesn't get boring. It's like, what next? So a lot of us feel that way after being in the industry for so long, but happy to be here.
Yeah, well, good to have you on, man. And this is, like I said in the intro, this is going to be kind of a little bit different than what we normally do format wise. But we wound up connecting online, and I thought that we could definitely bring some value to kind of all the listeners, both on my side and your side, just doing a little comparison between kind of what's going on in the multifamily commercial space, both in Virginia and here in the Atlanta market. So it'll be kind of neat to see what that correlation looks like and what some of those differences are too.
Yeah, I mean, there's a lot of overlap. I like to call it the standard investor route down I-95, right? It's a lot of investors, I'd say about 80% of our transactions are very transactional. I mean, we've done almost 200 transactions in the last 8 to 10 years. I mean, my team, and we see the trend of, the Mid-Atlantic, the Southeast, right? Investors come in the major markets. They look at Boston and New York, and they're like, these are expensive places. And then they go to DC. They're concerned with expenses and also TOPA. There's some really resident-friendly legislation. They go across the bridge to Northern Virginia, also a very expensive market. They come down to Richmond. Richmond's like, we don't understand Richmond, Southern Virginia, and the Hampton Roads, and they say, well, let's just go to Charlotte, right? I hit Raleigh, Durham, and like this place is cool, but like it's expensive. And then they make their way down to Atlanta, and they're like, this is an amazing market, a lot of great check boxes, but when you have these big major markets, there's a lot more competition, right? And the spreads are
Absolutely.
different, the yields are different. They're like, well, let me actually go back to Richmond. and then they talk to me. So it's a cool little flow. And I think if someone's looking at Richmond, they're probably looking at Atlanta too. So there's definitely good overlap we can share with all the listeners here.
Yeah, that's good stuff. So, like right now in your market, what trends are you seeing kind of shaping the multifamily market right now?
Yeah, so there's two things, right? There's the class A stabilized bells and whistles. We're definitely higher than the national average of vacancy. I mean, we've had 4,700 units planned for this year. Last year we had almost 5,000 in class A. We're talking like top tier rents for the Southern Virginia, mainly Richmond and as well as the Hampton Road. So we're seeing this stabilization, right? We were hit. COVID was an interesting time for Northern Virginia, where a lot of people brought their income to Richmond. So we're seeing the investor or the tenant move to Richmond. They don't understand Richmond that well. Like, what do you do here? Let's come here. We're willing to pay more to live here 2 to 3 years, maybe buy a house. maybe not. And we're seeing rents kind of reflect that big income. So the big thing is occupancy is 8.5, 9% for Class A, which is much higher than the market and the national average. And we're seeing some downward pressure on rent growth. We're still almost 3% in rent growth, which is pretty par for the course, but we're seeing what a city looks like that has thousands of new units that are all Class A compete with each other. How about Atlanta?
Yeah, it's pretty interesting. One of the main comparisons that I want to make is that for on the construction side, we had about 20,000 units that were going to be scheduled to be completed by the end of 2024. So that's a pretty stark comparison. I believe you said about 48,000.
No, we have 40 like 4,700. You guys have 20,000.
Oh, okay. I'm sorry. I misunderstood that. But yeah,
Yeah.
so we had 20,000 more units coming online for this year. And I believe that we have about our vacancy starting to trend up, obviously, with all those new units that are starting to come online. So that's going to kind of skew those numbers a little bit. And then that's obviously played a factor in rent growth as well, because as you get a lot more competition in the market, you can't really sit there and continue to increase rent. So we're starting to see a lot more rent concessions by a lot of different landlords and property managers, just so that way they can stay competitive.
Yeah, sounds about right. They're figuring out how to pivot, right? And I don't think Richmond's really at major rent concessions other than like very basic move-in specials, right? Which is a lot of markets do that, but I think Richmond is preparing to see like what is true move-in specials compete with concessions, and we could see that this year potentially.
So what would you say that some of the main draws are, or migration patterns or job growth that you guys are having in your market? And I'll touch on that here once you get finished too.
So Virginia as a whole, especially Richmond, you're looking at transportation, utilities, and education, trade, like a lot of great things. The biggest mover for the area is CoStar. Most of your listeners know or heard about CoStar. For reference, they're the nation's largest commercial real estate data company. They own, in my sector, they own homes.com and they own apartments.com. So like when we're looking at, crystal ball and like the guys that have the most data are doubling down in my backyard. I'm like, that's worth being excited about. Now, obviously, with that comes different rents and new investors and old investors are a little bit worried because demand gets bigger. But with CoStar doubling down, the largest purchaser of land in the last year in Virginia has been Amazon for data centers. So if you're looking at where the billionaires are putting their money at, it's Virginia and Richmond and Lego has a warehouse coming out. Like these big box stores and big box companies are invested heavily. And I'd say these trends are bringing new investors in residents. We've got several Fortune 500 companies or 10, excuse me. And we're just seeing growth with the big guys, and they're bringing their big businesses as well.
That's pretty fascinating that you bring up the data centers. I want to say that it was one of the economic forecast meetings for the beginning of 2024 last year. And this was one of their exact topics, how we've actually seen an uptick in data centers here in the Atlanta market, primarily because you guys were the topic of conversation. Like, even if land is available, the time that it takes to get infrastructure in place to power these data centers is usually like 2 years. And so at that point, you can go up there and buy land. And I want to say it was like $1 million an acre. And, I could be off because I was about a year out and definitely not
Hmm.
expert in your market. But I was like, holy crap, that is crazy that like even if you buy land today and start breaking ground, you can't tie in electrical or utilities for 2 years just because that's how long it's taken for the different utility providers to be able to service those properties.
Yeah, there's so much demand, and now they're buying in these even more tertiary markets within Virginia. And it's like, how do we get utilities out there? No one's ever needed utilities of this scale. So with these big companies, you're also seeing more construction, but also with more construction, you're seeing things start to be more accessible statewide. I mean, in Virginia, the Hampton Roads tunnel that connects, the peninsula, the seven cities. You've got Portsmouth and Newport News. There's a tunnel which is the largest infrastructure in the history of Virginia, over $1 billion to double the tunnel, which is like a very big linchpin for travel. And it's like we're seeing these infrastructure changes. Say we're expecting more demand. The largest infrastructure in the state versus like Northern Virginia, like a primary market. So these are just trends that everyone's seeing that if the city's doubling down on this, the state, co-star, it's exciting to kind of be a part of it. The growth, traffic's terrible, right? But like you're in Atlanta, I don't know traffic, right? You got perspective is a thing. So like, we're starting to see those things in our area too.
Yeah, for us, rush hour starts usually at about 5 o'clock on Monday, and it usually gets over by about 2 a.m. Sunday. So as long as you're
Yeah,
not traveling during that time period, you're usually pretty good.
yeah, yeah. You're
But
hours
yeah,
there.
with I want to unpack one of the things that you said with understanding development and knowing kind of what the path of progress is. Like when you start seeing more construction happening, you start seeing more infrastructure happening from like on the government and public sector side. Then with that, that usually spurs new businesses to come into areas. As new businesses start to relocate, then you're obviously going to get people that need to support those businesses. So you're going to have residential development in those areas, whether it's single family homes and neighborhoods or in your specialty, the asset class that you work, primarily multifamily. And then on top of that, then you start seeing all of the retail growth as well. So because there is the saying that retail follows rooftops. So there's a path of progress that we usually like to follow, and we kind of know what's coming next, being in the space that we are. Because I know here in Atlanta, like over from 2023 to 2024, I think just in the Atlanta MSA, they added like 110, 112,000 new residents just from people coming in. I think we were like the third among the major U.S. metro areas during that period. Because we had companies like Gas South, their new headquarters here in Cobb County, NVH Korea, they had like a $72 million facility that was built in Henry County. And so all of these higher tech, higher paying jobs starts to like kind of rising tide lifts all ships kind of thing. Where
Yep.
now here in the Atlanta market, we're starting to see median household income is projected to be about 95,000 by the end of December for last year. So it's kind of neat starting to see that. So it's gonna cause a lot more of that influx of higher skilled, higher talented people in some of the markets. So you'll start to see kind of a shifting dynamic in some markets. Have you guys seen some of that as well?
Yeah, we're seeing it every day. It's we Richmond, Southern Virginia has always been a secondary and tertiary market. So what happens, and we've done so many transactions that a lot of investors are also pivoting. I was coming to they say they're coming to Virginia for like 7 and 8 caps and value add. We're like, well, most of that's been done already, right? The mom and pops have sold, they're retired, they're selling the seven C's these days. So it's like you're buying these deals that aren't as aggressive on the upside. A lot of owners have done a lot of work. So with that, we're seeing renters who also are looking for better cost of living because we still compete. It's still lower than Atlanta, right? And DC and Nova. So like we have this sweet spot. And what's cool about Richmond is you go east 2 hours, you're at the beach. You go north 2 hours, you're in DC. If you want to go to the Capitol and then see the president, right? You go west 2 hours, you're in wine country. You go south 2 hours, you're in Raleigh, Durham, Charlotte. So like we have a good area surrounding us. So we're seeing the high net worth people come here and bring their high net worth jobs as well. And we're starting to see things trend upward.
That's good. And you brought up the fact that to the west is wine country. Now, we didn't talk about this on the intro, but you're a sommelier, is that right?
Yes, I consume a lot of wine and I figured I know things, right? Drinking I know things.
Absolutely. Do you want to talk about that at all?
Yeah, I mean, wine is something that's when I jumped into kind of commercial real estate, I noticed that my clients like wine, and I'm like, this is cool. Like, why are we drinking wine? Like, I didn't grow up around wine. My family still doesn't drink wine today. So, it was something that interest was piqued right when I jumped into this business. And then I remember seeing a documentary early 2000s, maybe like 2011 called Somm, where like learning about what a master somm does, which is like this. lifelong journey to be the 0.001% of wine experts in the world. So like being in commission, right? Everyone has that ego. Everybody has an ego if you're commissioned. Like you don't last if you don't have enough of an ego and confidence in yourself. It's like I could do that. And I looked at it and said, this is crazy. I can't do that. So with COVID, all right, I was already consuming. People didn't want to talk about real estate. Life was really interesting and slow. And then I was like, let me just study wine. And then during COVID, I jumped really deep into wine education. For the wine knowers, there's different courses and tracks and levels. And I'm level three WSET, which is kind of a college educated, 2-year master's program level wine knowledge. So, oh, did I lose you? Am I still there?
Yeah, I'm still here.
Oh, sorry, computer shutting down. Um, so like during that time, there we go. So during that time, I was reaching out to my clients and said, hey, let's social distance and just like talk about other stuff. And it was like this brought back this way of connecting with humans. Of wine is a connecting. It's lets people like stuff that is good to be around and do stuff that's not real estate all the time and say, hey, you're going through things, I'm going through things. We don't have to talk about real estate. And here we are, deep in the wine game.
That's kind of fascinating. I'm absolutely on the opposite end of that. So I have been sober since December of 2018. But I mean,
Here's the
I
year. Yeah.
totally respect the fact of having that kind of defined palate of it's not just a drinking game. It's like how do you how do you enjoy food better if you are a connoisseur of sorts when it comes to the wine side. So that's pretty neat. Have you enjoyed that part of the process as far as like getting real deep into the education with the wine side?
Yeah, wine is really the level of detail in wine is as much as you want. You can go all the way down into the pH balances of grapes and soils, right? Which the winemakers do. But with commercial real estate and wine, the cool overlap is that they can be very complicated topics, right? You can go cap rates and IRR and return and growth and yields. Like you can make it as complicated as you want. But how well are you at taking that data, ciphering through it and then bringing it down to a way that people can understand it? And can you speak the language at all different tiers, right? You have your mom and pops investors, right? And then you have like your first time wine drinkers, and you have your experienced investors and syndicators, and you got the people who have traveled the world to see wine. Then you got your experts and your REITs and your high ticket net worth guys who speak in the minutia of like the smallest little details. And then you have the like, I want to know all the details about this winemaker and why they chose a Hungarian barrel versus an American barrel. Like, it's just taking these complex things and just dumbing it down, if you want to call it, but like making it easily accessible to people. So it just helps me craft and then have good conversations with wine. So it's a good combo for me.
Yeah, that's good stuff. And that's one of the things that I tell a lot of the agents on our team on a regular basis is like you can be the knower of all when it comes to real estate, but like, well, how else can you tie that in to like your clients? So for me, instead of being on the wine side, like I smoke cigars, so I have a group of guys and clients that I would see on a regular basis that we kind of talk all things cigars. So it's always about kind of jumping into one of those facets inside, not only that you enjoy, whether it's a hobby or whatever else with your clients. But how do you create that additional line of communication? So that's pretty neat. I like that.
Yeah, man, I
So John,
think what you're mentioning is I tell new agents, we have like juniors and new agents, like, I want you to call this investor and not talk about real estate. And like you just see their face just blink, like, hey, that's a human too. Like if these
yep.
guys that are clients, they're not they can't be transactional every year. So I know that for me to follow up with this person, how do I follow up and be a human about it and not just bombard them with real estate data and facts all the time because then it won't be my email. So like, the listeners and clients, like people are humans, like talk human stuff as well, not just real estate all the time.
That's a great tip. I want you to call these real estate owners and don't talk about real estate. That's good stuff. I'm going to bring that one back too. So jumping back into the real estate side of things, right now in your market, if an investor is watching this and they're like, man, I want to look at the Virginia market, what types of multifamily properties right now, whether it's like class A, B, C, are presenting some of the best investment opportunities right now for you guys?
I mean, still see, right? We're seeing people. So Richmond and Northern Virginia are the biggest markets. Those are great. You know, as mentioned before, people are starting to expand outward, go into like Middlesburg or Danville or just smaller markets that people are getting priced out of as investors and also tenants. And when you have more big companies bringing more data centers and more jobs, and you feel a little bit better knowing that you can move not so close to the main city to really get everything that you need and access. So Class C, you're still value add. And then we have value add deals at 7 caps today on actuals that are performing where owners have gotten in and they've done a portion of the work. So you still see upside with value add. The B class is a really sweet spot, right? We see that at least in our market. The person going from B to A is going to ask themselves, do I really need a tennis court? Am I going to play basketball? That sauna, jacuzzi, clubhouse is really cool, but I'm going to use it. Like those are the questions that people always are asking themselves. And then, what we've seen with the economy, like inflation and other things that are having downward pressure on people's balances, they are usually moving to the Bs. Like the B class, at least since COVID, right, has been really extremely strong and consistent. And then the A class guys, they're very unique balance. So I say if people are looking to really like make money, C class is workforce really well, but B is the sweet spot. I see a lot of owners who got like COVID fatigue, like really staying in that sweet spot these days.
That's good stuff. And I think that kind of paints the picture pretty well for anybody that might be wanting to look in that market. So do you feel that investors right now are more focused on just the value add opportunities or stabilized assets? Or do you think it more has to do with kind of their risk tolerance?
It's a lot of risk tolerance. I think we've during COVID, we have more investors who are not in multifamily say, let me get in. Stimulus checks are great. We know that the ultimate risk test was if things are crashing, is the government, big brother, big sister going to step in and help? And we saw it with housing. So had more people jump into multifamily during COVID than ever. Now, after COVID, and we went through, Virginia was definitely a more friendly moratorium state for tenants and like rent collection. And, you know, there's the people who abuse the system like anything else, and people who are also great tenants. We a lot of owners say, I want to like kind of get out of value add because it was so much work. So I think the demand is in B class across the board, but there's still plenty of C class going around. Um, if they want to make money, it just depends on that person's tolerance for like risk and rent collection these days. You're going to get the C class are usually more paycheck to paycheck, right? So like there's really more hurdles to get that rent at upside than there were, previously. So it's truly person by person these days.
Yeah, and I know that just to do a comparison of say Virginia to the Atlanta market or Georgia really as a whole, we're more of a landlord-friendly state. So if anybody watching this is like kind of curious about where you're wanting to potentially park or buy an asset or own something, that's definitely an important characteristic to know about the state that you're going to invest in because if you ever do run into issues with tenants, you need to know if you're going to be able to actually evict them or you're just going to be able to be sitting on units where you're not collecting rent and having potentially a higher vacancy for longer, depending on kind of what the circumstances of that state are.
Yes, I mean, it's a good topic. I think years ago, politics wasn't as common in our everyday conversations, right? It was more of like we talk about politics, when we're having a cigar with close friends, right? Or drinking wine, like, at a wine shop or somewhere. But now we're seeing policies start to really polarize in certain states, certain regions. So if you're a new investor or you want to invest in a certain state, look at who the city council is, look at the local, like the really granular area, so you know what you're going to do, and also like check your senator, your governor's like policy because things are changing and people are like, oh, I didn't realize I could do that. Well, like your due diligence level looks much different these days in a lot of states.
Yeah, no, that's good stuff. That's definitely a good add-in that you put in there. So when it comes to financing some of the multifamily deals in your market, are you seeing any conditions potentially impacting that?
For many years, the value add was 25% down, or let's say smaller deals. And we were churning, right, when cap rates were at 3%. People were getting in deals like 15 to 20. Um, Interest only for value add was a thing. People were or doing construction loans. And we've seen a big slowdown on all that, right? The consensus for investing as a whole in Virginia is like we still want value add. It's great, but these lenders, it's so many multifamily deals that they're like, let's be much more selective with multifamily. If you come in with like a self-storage or some other really great investments these days, maybe not, but with multifamily, they're being much more just truly selective. So financing is still strong. New investors still have a hurdle. Much more relationship-based lending as well. If you're a first-time buyer, a really new buyer, like you still have a bunch of hurdles to go through to prove yourself. But experienced guys with hundreds of units, they know their lender knows them, there's a track record. They're willing to get more aggressive on rates and everything. So I'd say financing as a whole in Virginia is tightening up slightly on multifamily across the board.
Yeah, and I would agree with that here in the Atlanta market as well. Relationship-based lending is hands down the way to go. Don't try to go through any big box places because you're going to have nothing but hoops you have to jump through. And the likelihood that you're actually going to get that loan bought is probably slim to none. Um, so with some like vacancy and rent trends that you guys are having over there, like here in the Atlanta market, we were touching on a little bit earlier that we've seen probably an 80 basis point increase here in the Atlanta vacancy rate. And so that's definitely slowed down or provided a decline in what kind of effective rents. What kind of trends are you guys seeing there in Virginia? Like what's some of the asking rents?
Yeah, I mean, so in Richmond, Class A one bedrooms, you're at 1,100, and
Okay.
we're really starting to see the add-ons. Um, Years ago it was 1,100 would include everything, right? Now we're at the point of 1,100 plus like 1,100 plus pet fee plus water bill back, utility bill back, plus electric was always separate, but you know, we're admin fees, internet package fees. Like we're starting to see owners really push back more of their overhead to tenants in the Class A. I mean, pretty much at Class A, everything's almost completely separated, broken out. So that's one thing that we're starting to see in the last few years. Class C is starting to push back on water, where a lot of those properties and owners were in Virginia was like old hotels or motels or just like brick buildings, 70s brick that there's only 1 meter for the building. So they weren't designing them that way. But now with new technology, we're seeing owners you can put these sensors on water meters, sensors on water to the unit, so we can see how much water people are using. So between the Class A multifamily that has base rent plus all the bells and whistles being tacked on versus the Class C that they're starting to incorporate water as like a utility bill back as well. Mainly what we're seeing in our rents as owners
Yeah,
do that.
and I would agree with that. We're starting to see a lot of that here on our end as well. And to give you an idea of where we're at as far as our effective rent here in the Atlanta market, one of the reports I have up shows about $1,622 per month as of June of last year. And for Class A, you're looking at probably about $2,000 a month. And it's funny, what you're talking about, where most landlords are now starting to pivot to where they're passing through a lot of their costs, which was previously just kind of either all included,
Yeah.
now on to the tenants. So it's almost like a new variation of a triple net lease, but on the multifamily side.
Yeah, no, I'm pulling up, some hard data for the listeners. So Richmond's average rent between all class types is 1530. So, we're pushing up there quickly. And I think that's, in 2023, we had 6,000 new units, right? Atlanta's tripling it, but for a little small market like Richmond, 6,000 2023, 4,700 last year, and then we're about five-ish coming in 2024. Like a lot of Class A at the same units. We're seeing average rent really get pushed up there.
Yeah, that's good stuff. I always like seeing the differences between different markets because it can be booming in one and then a bust in another.
Yeah.
I know here specifically, and I'm sure that you guys have, because it's pretty much been an issue nationwide when we start kind of moving into tenant demand and affordability, like just the residential housing situation, if you will, from an affordability standpoint across the nation. That's been a challenge for everybody. So, like with those rising homeownership costs, have you guys seen an increase in renter demand specifically for multifamily? Or have you guys seen that also trickle over on maybe the residential side, just kind of understanding like what's going on in the market versus like where that demand and that need is?
Yeah, we're seeing similar things across the board. I think because of people not knowing about Richmond, a lot of people come here for the first time just planning to rent for a few years, and then end up staying, right?
Yeah.
Owners and like when you bought a home at 3%, you're not moving unless you have to. And same thing with sellers and investors on like the commercial side. There is a large demand for units. Affordable housing is something I'm also very passionate about, and we're seeing more people be understanding of like maybe we need affordable housing, and the word affordable housing has gotten skewed so much. End of the day, it's like our where do our nurses live? Where do our police officers live? Where do our essential workers live? Are they living an hour away, 45 minutes from their jobs? Right? Like let's find ways to get people to live closer, and with affordable housing is bringing a lot more amenities, similar to like the utility discussion we were having earlier. There's still high demand for home ownership, but the numbers just aren't penciling out these days.
Yeah, we're starting to see that as well, and I too am passionate about the affordability conversation. I know here in my market, which is just kind of the northeast section of the state in Athens, Georgia, we are definitely a secondary market, and we have lots of tertiary markets that surround us as well. So the availability to do like manufactured housing, that's huge out here. I mean, you can get a brand new manufactured house for a significant discount compared to buying a 20-year-old stick-built house that's closer to the city. So that's
Mhm.
still an option on this side of town. Are there any particular submarkets around you guys where development's either really starting to boom or slow down? I know that we kind of touched on that with some of the infrastructure development that you're seeing, but like, what are some of the other kind of key markets to maybe keep an eye out for?
So within Richmond, you have Midlothian is a really big market. It's usually the suburbs, right? It's the suburbs. You've got your one or two grocery stores, big chain. You have your textbook shops, your major road going through there. And with Richmond being bombarded with the developments, most of the Class A developments have been within Richmond City. And then we're just seeing investors slide out. So if you take the map and use them now, you have Midlothian, Chesterfield, Henrico County. Um, Everyone is just expanding because with so much more opportunity across like the city, it's okay to have Class A apartments that are 20 minutes from the city. Again, like major markets like Atlanta, where Richmond's following those same trends of people are paying for nice things. They want to be close enough. And if one or two main box stores in their area are fine to live and then have a family. So, Henrico is a really big one and Midlothian these days.
Oh, that's good stuff. Those are you basically were speaking Spanish to me because I don't know the geographical for the area, but anybody that's listening that's paying attention to that area, definitely go check it out now that you guys are a little bit up to speed on what's going on. So, for anybody from a development standpoint, are there any maybe regulatory hurdles or zoning changes that any potential investors or developers would need to be aware of in Virginia that you know of?
I mean, Richmond's been very pro development. So we just got a new mayor. The previous mayor was very pro development, very pro industry. Let's bring in these big companies. As we're saying, big companies want to, how do you attract larger employers to the area, right? And there's whether it's taxes or infrastructure things. So we, like I mentioned before, we're seeing big companies come here. Pro development has been great. Our new mayor is also big on affordable housing and developing, and how do we get permits done more, faster? How do we get people into homes and into housing faster and more efficient with still high quality? So if you're looking to develop in Richmond, there's not much left. Like most of the land's been gone and then taken, but there's still people who are doing it, and it's very friendly. The state of Virginia, we've got this massive surf park coming to uh, Virginia. That's supposed to be like the nation's first massive like live work play surf park with like apartments, and it's like I don't surf, but I might have to. Like it looks really cool.
Now
In
that
Virginia Beach,
option.
it might have to be wine and surfing, right? I don't know if those are compatible. The Virginia Beach, you've got like Pharrell, the artist who's from that area, is doing a big kind of park venue there, music venue near the water. So we're seeing really massive, almost one of a kind investments by coming to the state. Again, like making things cool and livable, and like again, live work play is a big component for a lot of developers. So like we welcome developers, and there's a lot of things going on these days.
Yeah, and I can mimic that same response here in the Atlanta market. The live work play model. I mean, it was already alive and well for a while, but I think after COVID, everybody really started kind of taking a closer look at, where am I currently living, and is everything that I need within close proximity, to be able to get food, to be able to get entertainment, to be able to do all of the things that I want to do. And the neat part is like almost every live work play area around the Atlanta market, they have just a little bit something different to offer depending on kind of where you're at in the city. So it's not all just same exact duplicatable live work play models, but I really think that we're going to wind up seeing a lot more of that for years to come.
Yeah, absolutely. I mean, I whenever I go to New York, I think about that. I have friends who live in New York, and it's like, hey, have you seen this new cool thing? It's like, no, I haven't left my 4x4 block, right? And then, but
Yeah.
traffic in New York and it is like another part of that city. But I think that's what we're seeing here. Like the old school was we live in the suburbs, we have a couple outing or a family outing, like driving to the city potentially. But now, like in our own little submarket, our own little community, we've got this cool park. We have a surf park now. Like you said, I think that these little clusters is much more exciting, and developers are seeing that and they're saying, well, if I build it, they will come, even in this small little market, like these cool things. So it's actually interesting, to not have to drive downtown into the city for everything. Like we're driving to different parts of town and exposing that to everyone else as well.
Yeah. And I think that Atlanta and New York are one and the same, where you can still be in the same geographical city and you can drive for 2 hours and still be in the same city.
Yeah, like no, we don't. When I go to New York, say, hey, like there's these wine bars all over town. It's like, have you seen that? No, like this is my wine bar. This is my pizza shop. I'm not going south of this street or at this time. It's like, well, that's it's funny, but that we're seeing those trends start to happen in the markets these days.
Yeah, absolutely. So speaking of markets and trends, this is where I like to kind of put our crystal ball in place because you know as well as I do, especially when our clients are asking like, "Hey, what do you expect to see in the market?" Everything's an educated guess until we're either proven right or proven wrong. But what would you say your predictions are for 2025 and maybe even beyond for the multifamily market in your area?
Yeah, I think oversupply is our biggest concern for a lot of people. With just speaking, at least using some data here, it's the vacancy rates are very high, and that's paused and that's pushed by the Class A. So, like you said, the Class A guys have two options. It's concessions, keep your rent, but give all kind of extra incentives for them to move in now and pay rent that you want at your property, or B, it's drop your rent, right? So in the Class A rent, with the swimming pool and the tennis court is not much greater than the Class B rent that doesn't have the amenities. You're going to see downward pressure on rent, on rent growth, which is going to scare a lot of people and make things easier for others. So I think oversupply is our biggest concern on, where the forecast is still Richmond's going to see good job growth, good demand, good people still moving to the area, but this is going to be a good, interesting year of like how much and how accurate are these projections. I think that's my thing for investors. And I think the other part is let's just see, right? That's my biggest thing that I think about all the time. It's like, where's rent growth going? Well, the guy above you is getting stuck. So you can't push much more because you don't have any bells and whistles. So like, the demand, northward pressure and downward pressure is interesting these days.
Yeah, that's it's always interesting. There has to be, for one, some vacancy in every market to allow people to kind of come in, come out, enter and exit, and then there also has to be some new opportunities and some competition in your market. So that way, it allows everybody else to actually be competitive. Because when there's not any uh, direct challenges against your property type in your market, and there's not anywhere for anybody to move, then you start to see stagnation, and that's not really good for anybody. So I think we've done a pretty good job for today as far as outlining everything from the investor standpoint. But before we wrap up, I do want to actually give a chance to kind of speak to any other brokers that might be kind of catching this podcast. So, what advice for any brokers or skills or strategy would you recommend for brokers to focus on to stay competitive in today's markets? Anything that you kind of preach and teach to your team or that you get taught to you?
Yeah, value. Value is the key word every single day, every interaction, right? Um, we live in a world, and you mentioned CoStar. CoStar is a list of everyone, owners, investors, and with more people having access to data, there's two things to keep in mind. It's one, is that data accurate, right? Which is, kind of understood, but more importantly, if I have access to CoStar, then I know Jake has access to CoStar. Every other broker has this access, and that's more calls that people are getting. So now the number of calls that owners and investors are getting is like exponentially higher. So when someone calls, are they going to pick up the phone? And if they do pick up the phone, what do they want? They want you to have value in their conversation. So I joked earlier, like, hey, call this owner not about real estate. Well, if you do call them, what real estate value can you bring or interpretation? Because all of us are on the same websites, all of us get the same data. So it's like, I know you got the same email I got 20 minutes ago. So how do you provide a detailed version of this topic that you see valuable? The other part is with data being so accessible in our phones at all times, how are you interpreting it that's relevant? I think it's easier to misinterpret or look at clickbait things, but like, how do you cipher through all the minutia of like this is actually real good data? So that's my two things for brokers is focus on adding value. That's not a copy paste article that investor has already seen, and what can you add to your person?
No, that's good. I really like that. And I'd like to add to that as well. One of the things that kind of we teach our team about, and it's very similar to the, call this person and don't talk to them about real estate, is there's so many times when I'm on the phone with a property owner or an investor, and I'm calling maybe about something else that's traded in the market or whatever, but their first response as soon as I say that I'm a broker is that, listen, I don't want to buy or sell my property. And I'm like, that's fine. I wasn't going to ask if you want to sell. And then so at that point, their guard kind of comes down because they're so used to getting hammered with that same line all
No,
day long. So if you have something else that you can actually talk to them about, be like, and then I usually like to pivot with, well, hey, let me ask you this, man. If you were to buy or sell anything in the future, like, is there somebody in the market that you would already use? Because if somebody says, man, I'm going to work with Justin, he's my guy, that's fantastic, man. It sounds like you're already in great hands. If anything changes, let me know. But for the most part, I'm moving on to somebody else that doesn't already have a Justin in their life that is staying in touch with them, that is networking their butt off and is keeping them up to date with everything that's going on in the market. Because those are the individuals that I've found that you can actually provide value to that don't have that Justin in their life, simply just by doing some good outreach and asking some good questions.
yeah, that's great. I mean, there's an episode of The Office, that I always resonate with where I guess the main guy he has like his Rolodex, right? And he had a color code and label and all these little details for every single client he worked with. And someone else got it was trying to poach. I think it may have been Dwight was trying to poach his business from him. And he's like, I know everything about my clients. Like they're deeper than just their name, like their family. What do they like to do? It's like, how can I add value to their life at all time, not just one transaction? Because we know like multifamily holding patterns are 3 to 5 years. So like if I need to stay in front of this owner and speak with them minimum every 45 days, every quarter for 3 years before they're like thinking about exiting, like what do you talk about? Like that's where people get stuck. It's like just be mindful, like stay on the radar, but don't bombard them. And there's other things that are going on in their life other than this portfolio. So that's what I like to share with any brokers or investors who are doing this.
Yeah, no, that's all good stuff. Well, man, I got to say, I am absolutely pleased that we had you on today. I think it's been some great conversation. If anybody is looking to invest in the Virginia market, has any questions about the multifamily space, please reach out to Justin. Somewhere below or around this video is going to have all of Justin's contact information. He's a phenomenal broker. And also, if you have any wine questions, he's probably the guy to hit up as well. But Justin, I've loved having you on. Any kind of final words of wisdom or insights that you want to leave before we jump off?
No, this has been great. Hope everyone provide value. Jake, you have a great platform here and a good conversation as well. To the older brokers, who have been through this before, discipline, stay the course. For the newer, younger brokers, like cycles are a real thing, right? Just you may have told the old guys say there's a cycle. Well, here we are. This is a cycle, and you're right in the heat of things. So discipline, block and tackle, and things do change, but it's I'm still my crystal ball was out there, sunny skies on the way here, and it's been great being here, being a part of your podcast.
Well, good, man. I appreciate it. And this has been another episode of the Northeast Georgia Real Estate Podcast, and we will see you guys on the next one. Thank you for tuning in to another episode of Northeast Georgia Real Estate Podcast. Now, I need your help, guys. I am working towards an absolutely massive goal for next year of creating new opportunities that will allow me to not only serve my clients better, but help them achieve their commercial real estate goals as well. Key focus for 2025 is going to be for me to acquire 2 additional commercial properties, further expanding my investment portfolio and my impact in our community. This journey will allow me the freedom to spend more quality time with my family, which is the end goal. I'm sharing this in hopes of being able to connect with others who align with this vision. So if that's you, whether it's through partnerships, investing, networking, or new business opportunities, please let's connect and build something together. Thank you.